Hello and welcome to another update video about Bitcoin. Bitcoin continues to head further down. Today we had a bit of a friendly day, but it was only a little bit of a recovery of yesterday's lows or the overnight lows. So we just had a bit of a relief rally. I wouldn't even call it a rally. I think price went up by $500 or so. So we are going to zoom in a minute to take a look at the downside setup we have there on the chart at the moment. The move down here of the April highs is certainly not an easy count. It leaves a lot of room for interpretation and different counts are certainly possible here. My best interpretation is still this one, that of the 14th of April high, we came down in an ABC structure. So what I'd like to do, I would like to talk a little bit about targets to the downside again. And we're going to take a few measurements, a few fib extension measurements.
But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators.
So if we take a look at this and if we say, okay, we are coming down in a wave 2 and the wave 2 unfolds as an ABC structure, then typically the first thing I would do, first of all, in a wave 2, I would try to establish what are the typical Fibonacci retracement zones that are on the chart in a wave 2 for a wave 2 correction. And that would typically be the region between the 50% retracement and the 78.6 retracement. And that would be in this case between 25.3K and 22K. Because it tells me that if price goes and sustains or drops below and sustains below 22K, which is the 78.6 retracement, then typically this 1-2 setup is going to become very, very unreliable. And any further upside will or may not happen. At least not in this wave count. So it is a little bit like an invalidation point. It's not formal invalidation, but typically when price breaks below that level, you know about that, then it will typically not work out. Next thing that you can do, and by the way, I added in this case the 38.2 retracement level onto the chart as well, because in a wave 2, it sometimes is relevant for the A wave. So the A wave sometimes touches it before we get a B wave bounce and before we come down. In this case, it was a little bit different. We've been dancing on that level here a few times now, or for a few days before we finally broke down. The A wave didn't quite touch it. The next thing we can do to identify how low should the C wave go is we can use the Fibonacci extension. So as I said, the retracements can be used for identifying the standard Fibonacci retracements for a wave 2. As soon as we have the A wave in and the B wave, we can use the Fibonacci extensions to identify common targets. And a common target for the C wave is, first common target is the 61.8 extension, but it is probably the least common target, one that I don't normally pay too much attention to. So we broke below that anyway. The next common one is the 100% extension 26k or 26,070, also the so-called 1-to-1 ratio, and it is the target that when reached indicates that the wave A and the wave C have the same length. It's a very common target. If I zoom in, you can see price reacted here already on the 12th of May and overnight again, okay, and a few times now. So that's an absolute relevant level. Obviously, it could turn around here just purely based on Fibonacci extensions, because the 1-to-1 ratio is an absolute common target. But I have no strong evidence it's doing that. And then we've got the 1.618 extension. That's down here at 23,670. I don't necessarily suggest we go down that low, but we'll see. Yeah. So the 100% extension is already reached. So that means from a retracement point of view, also extension point of view, we have done enough to complete this correction. Now, then we can use another method, which is to identify the length of the fifth wave. Because if we say we are in a C wave, then we have done already the wave 1, the wave 2, the wave 3, the wave 4. And the idea is that we're now in the fifth wave. We can use the Fibonacci extensions to identify the length of the wave 5. Again, as you can see, there are various legitimate ways of calculating targets. There isn't really, one that I prefer. It's just that they all come into play at different stages. Because, you can really only measure the length of the wave 5 as soon as you have waves 1 and 1, 2, 3, 4 complete, right? So we can take the length of waves 1 through 3, and we go to the high to compare with the length of the wave 5. And the very first target is the 38.2 extension. So like magic, this is basically also 26,100. Pretty much good overlap with the 1-to-1 ratio that we just looked at. So it's quite funny how that sometimes works out. And the next target would be the 61.8 extension. In this case, 25,136. Now that's very much overlapping, or very close at least, to that 25.3k level, the 50% retracement. So there is a confluence of support in this region here around 25k, 25.5k. Yeah? There is one more way of measuring the length of the wave 5, and that is to take only the length of the wave 1, go to the wave 4 high, and look for the 100% extension. And also here, 25.3k. So there really is a lot of confluence around that 25.3k level. It is certainly a level of interest. I'm not telling you that we definitely will turn around there, but it's certainly a level of interest that is probably worth observing when we get there. So now that we established possible targets, and by the way, they are all moving targets. I mean, at some point we will be able to calculate the length of this wave 5, which is the wave 5 and the wave 5. But we need wave 3, 4 for that. Okay, now let's zoom in. And the assumption is that we're obviously now in the wave 5. And in the wave 5, we've done here of this, of the Monday high. We've come down in a wave 1. By the way, this was the 15th of May high. We've come down in a wave 1, rallied probably in a wave 2. Now we are coming down in a third wave. My reading is that what came down of the Tuesday high was just the A wave of the third wave. Again, I'm identifying the fifth wave as an ending diagonal. So we've got corrective subwave structures here. So I'm counting that as the A wave in a 5-wave move. We're currently retracing in a B wave, and we could then come down in a C wave next. I did explain to you in the previous video that it is also possible that all of wave 3 is already in, and we're now moving up in wave 4. But it doesn't make a difference short term, because the retracement targets are very similar, and both would still point to at least one more low. Condition is that in this retracement, the 27,150 level is holding. Well, we stay below that, because if we go above that level, it would basically be too much of a retracement to make this a valid or at least likely wave count. Now let's zoom in even further. And if we say, okay, we came down in an A wave, this is now the wave B pullback, then we are watching to get 3 waves complete at least. And I think we have a W complete, an X wave, and the Y wave might just be in the making, maybe already complete. We didn't reach the 50% retracement. We don't need to. We came very close. It's certainly done enough now in this B wave, but until we break below the X wave low at 26,150 or 160, we can't really say the B wave is over. So I need to see a break below this support to indicate that this B wave is finished and that we are coming down in the next sell-off, probably targeting around about 25.3k. Now, if I've got this as a WXY structure, now really diving into the micro here, what would be a target for the Y wave? You know, WXY, what would be the target for the Y wave? Again, we can use the Fibonacci extensions that we take the length of the wave W, we go to the low of the X wave. You can see we reached again the 61.8 extension. That is a very common target, but more common is the 100% extension at 26.8k. Yeah, and then we've got the 1.618 extension up here, but that is just above the 78.6 retracement. Now, I wouldn't see it is a problem necessarily to reach that, but obviously if we get there and don't turn around immediately, then it would rather emphasize maybe that something slightly more bullish is going on. We'll see, but at some point here, as long as we stay below 27,150, a turnaround is expected to the downside, targeting roughly 25.3k in the next sell-off here. And I told you which level needs to break so that we have a confirmed break. Yeah, and that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, if you're interested, check out our Twitter and Instagram channels. Here you can find additional content every day. There's stuff about trading, TA, Elliott Wave, you know, all sorts of stuff. So check that out. And you can find the links in the description. Thanks a lot for watching. Bye-bye.